Ignary, and I'll be presenting the presentation today. So,
Wonderful. And what is the topic today? It was a bit of a longer
today
one
we're
than
going
our
to be
typical ones.
today we're going to be talking about defined benefits. So we've been talking a lot about just different charitable planning avenues. I'm going to open up a little bit and just do tax planning in general instead of just specifically charitable planning, even though they kind of go hand in hand. So defined benefits are one of the most impactful things that a small business owner can do. And so we're going to spend some time on that. And I've changed our direction a little bit. So I've changed what many of you are used to as far as our slides, if you've been on our presentations before, because I wanted to see that we are going to make a little bit of a change here and a broader change. We are going to talk about defined benefits, but we're also defined benefit plans. But we're also going to talk about the gospel. We're going to talk about the Bible and Jesus and missions. That's what we're here for. That's what it's all about. So just so you know, going forward, that is what we're going to be talking about. But in any case, you're welcome to stay. But just so you know what direction we're going to go here. So this family here is on a little Honda. I guess it's a motorcycle, maybe a scooter, but looks more like a motorcycle to me. And that's one of the things that Final Frontiers can do is they will supply national pastors with these motorcycles, which makes it much easier for them to get around and much quicker. Many of them will go to multiple villages throughout the week, and they have to walk or ride a bike. And this will speed up their efforts. And, walking every day, it's good exercise, yes. But on the other hand, it can wear you out. So this will help them get more of the gospel out and just help them do a better job or a more efficient job. Let's put it that way.
Yes, we actually have a webinar coming up tonight on motorcycle ministry. For those who don't know, May is our motorcycle month where we're trying to push motorcycles. So join us tonight and learn a bit more. Hear from some of our national church planners who have received motorbikes and some who are in need. That's a good segue there. It's at 8 p.m. Eastern tonight.
8 p.m. Eastern. Okay. So
go to finalfrontiers.world/webinars and you can register there.
Yeah, I think I'll be able to be there. So good to hear about it. All right. So this is a very deep topic, but we're just going to kind of hit the high points. We'll probably, as often we do, is generate more questions than we answer. But that is the idea, to get you asking some questions. And just hopefully you'll dig and find some answers and talk to the right people that will give you the answers that you're looking for and help you. So let's move on to the next slide. A defined benefit plan. They're a powerful retirement and a tax planning tool. They do two things. They can help you with tax planning and they can help you with your retirement. As opposed to a defined contribution plan, they provide retirement benefits based on a predefined or predetermined formula. And what that means is you got a defined contribution. The most common one is a 401k. So if you have a 401k, you're putting aside a defined amount each month. You're contributing a defined amount each month. You're putting in $100 a month, $200 a month. That's your defined contribution. Whereas a defined benefit is the opposite. It's what you're going to get in income in retirement. You're going to get $500 a month. You're going to get $300 a month. And that you can count on. And that's one of the most powerful things about defined benefit plans. They were very popular for a while, but then they kind of fell out of favor with the advent of the 401ks and similar 403bs. And the lines between 401ks and 403bs have become somewhat blurred. 403bs were set up originally for nonprofits, but there's a lot of that distinction has disappeared, but they still are set up for nonprofits. So employers will pre-fund pension benefits in a pooled trust account, and that's set aside and that earns. And it's also administrated by what they call a third party administrator to make sure that everything is operated the way it should be and stays within ERISA guidelines. So, next page. So, an employer makes an annual contribution based on actuarial calculations. Actuaries are those who take all the statistics and permutations and they figure out what the chances are of this happening and that happening. We hear about them mostly on the insurance side, but they work on this side as well. And they look at market forces and everything going on, and they figure out, okay, it should earn about this month, about this much over a period of time. So the assets accumulate with the contributions and the investment gains on top of it. So this, like a 401k, grows tax free. But when you withdraw it, that's when you pay the taxes, just like a 401k. But again, this is a defined benefit. You know what you're going to get out in the future. So the employees choose the payout options under separation from upon separation from service. And many times you, the business owner, are considered an employee. I have my own company. I am a LLC, and I'm also an S corp. But I own the business, but I'm also an employee. So I, as an employee, can choose my payout options when I separate from service from my own company. All right, next page. So the small business owners, like we mentioned, as employers and employees, we wear both hats, employer and employee. So I can set up my own defined benefit plan, and then I decide what I want in retirement instead of putting away a few $100 a month, hoping the market does what I hope it does, and see where I end up. This, I determine ahead of time what I need in retirement. I calculate what I will get from Social Security. Are there any other pension benefits that I could look into from past jobs or anything like that, or any other 401ks, any other income that I might be getting? Then I can sit down and go, all right, I'm going to need this much. And then I can build my defined benefit plan around that. And then the tax deferred contributions fund the owner's benefit as well, tax deferred. We're going to get to a sample case here in a minute, but it's tax deferred. We do pay taxes on it as we pull the money out. All right, next bit. So a two-person plan. Yes, you can set up a two-person plan. In a two-person business, the owner and the other employee benefit. Under a defined benefit plan, you do have to make contributions, but there is a formula and a scale. And the owner defines the retirement benefits for both. And it allows you to contribute to maximize your tax deductions. We're going to see in a minute just the huge difference in the tax deductions. Now, there are cases where there are like a physician's office where they're all partners and they all file K-1s. And some of the partners, they don't want to participate in the retirement plan. And so they opt out, but other partners do want it. And so they can't, because the others have opted out, they can't, because everybody has to be on board. There are ways that a defined benefit plan can be set up so that if one, let's say we set up one, well, I didn't set it up, but our network set up one a few months ago where there was 40 physicians in this plan. 38 did not want to participate, but 2 did. And they were able to set up a plan for those 2 physicians and set them up with a defined benefit plan, and they got rather sizable deductions for it. All right, next page. So every dollar I put into a defined benefit plan is tax deductible. Delayed tax payment leverages the time value of money. So I put in a dollar, that whole dollar is earning a return. Whereas if that dollar is taxed, then it's, my tax, let's say 20% is taken out for taxes, then only 80 cents on the dollar is being invested. So that can make a huge difference over time. So the wealth can grow unencumbered by taxes while it's in the plan. But we'll pay taxes when we pull it out, but only on what we pull out, not on the whole amount. Okay, next page. So here we have a comparison, and we look at a guy who he's at age 55 and he hasn't done anything. We see that a good amount of time. And he's at 55 and he wants to retire at 65. So he has 10 years to accomplish it. So under a traditional defined benefit, he can put away $137,358. Whereas in a profit sharing plan, he can only put 50,000. So on an annual basis, that's an $87,000 plus difference. Now, when we get to age 65, the accumulation under the traditional defined benefit plan that was 137 plus a year has accumulated to $2,261,465. That's what he can have for retirement. Whereas in the profit sharing plan, it was 739,000 plus. And this is assuming in the profit sharing, it was a $50,000 contribution growing at 5% for 10 years. Obviously, 5% by many people's standards is a very conservative estimate. So the difference between what the defined benefit plan could do as opposed to the profit sharing is $1,522,000 and $522,285. That's a bit of a difference. So it can be very powerful in the right cases. And as I said, there are cases where we had another case down in Florida. The guy, let me remember, I think he owned an orange grove or something like that. He had about 1,000 employees and they have a 401k, but they were able to set up a defined benefit for just him. And he just retired and he is, making 10 million over, I think it's about 2 million a year from his retirement fund. A 401k and everything won't do that because you can't put enough away. If you're making $300,000, $400,000, $500,000 a year and you can only put away 50 some thousand a year, it's not going to allow you to maintain your current lifestyle. So definitely a defined benefit plan is something to consider. And like I said, it can have the biggest impact and the quickest impact for a lot of people. So let's move on to the next page. So again, going back to the beginning, the whole reason we're looking into this is that we want to get the gospel out. Jesus said, "Go ye therefore and teach all nations, baptizing them in the name of the Father and of the Son and of the Holy Ghost." And our objective here is to help us find ways to help get that gospel to all nations. There are many nations, there are many people that are not hearing the gospel and they just don't know about it. And so we're trying to find ways to help finance that and get the gospel out. And Final Frontiers has reached many people that are untouched by many things. And they are literally scouring the earth, looking for ways to get the gospel to more and more people. And the level of success, and yes, I am shamelessly putting a plug in for them. The level of success that they're seeing across the world, I mean, the amount of people getting saved is incredible. And they're being won to the Lord by national pastors. And they're starting local churches in their own villages. They know everybody and everybody knows them. And many of these pastors in many cases are risking their lives on a daily basis to get the gospel out. Surely we can do something to help them. We can help them get a motorcycle. We can help them feed their family. We can help them build a church building. We can help them get more Bibles to their people. We can help them with uh, water. Many of these places, the water is part of the issue with their health. And we can find ways to help them get water or filtered water, or even help them dig a well. Many, many things. But the bottom line, as we all know, that takes money. And so that's what we're here for, is to uncover ways to be able to provide more funds to, to these efforts for these national pastors and reaching the lost. And with that, we'll move on to the next one and say thank you for being here and for taking the time. It's not a lengthy one. Like I said, we were just hitting the tops. And if this is something that appeals to you, I would encourage you to sit down with your financial advisor, contact your CPA and your attorney, and say, I want to look into this. I want to do something more. I had a CPA called me 2 weeks ago, and she said, can you help my client? And so we're working with her and her client to set up a defined benefit plan, because he wants to do more, set aside more. So we're working to help him. So thank you, and may the grace and peace of God go with you. Thank you very much.
Thank you for joining us. That's definitely very interesting. So would you apply this as more for owners of small businesses? It's kind of something they may be interested in for setting up for themselves and or employees potentially?
Right. In most cases, a defined benefit is for smaller companies and primarily for the owner, because the bulk of it will be set aside for the owner. And, it may sound unfair that the employee doesn't get as much set aside, but the owner pays the rent, pays the light bill, started the company, and good owners will take care of their employees.
Yes.
The owner has to pay. It's not a defined contribution. The owner has to put aside the money for his employees. So that's why it can be, if you have a lot of employees, it can be pretty expensive. And that's one of the reasons it kind of fell out of favor. But there are many cases, and there are things, like I said, in certain cases where you can still have a 401k and a defined benefit plan for just the owner. But that is a very special circumstance. Usually the owner is having to pay in excess 175,000 in taxes. That's kind of the starting point to qualify. And then there's other things to qualify for that. So can I make a blanket statement? Oh yeah, anybody can do that. No, you have to be able to qualify and have the right structure, but it is possible to do that. And like I said, with that group of physicians, 40 physicians and only 2 wanted to set up a defined benefit plan. We were able to help them. Many times that's not able to be done, but in this case, we were able to do it. So it's worth sitting down with somebody, and at least if you fit into any of these situations, it's worth at least exploring with somebody and finding out more about it. So, and that those deductions can help you have more money in your pocket to do other things. So that makes sense.
Wonderful. We don't have any more questions. So everybody watching, make sure you check out our webinar page at funnelfrontiers.world/webinars for upcoming webinars. We'll be back next month for our next charitable giving webinar. Have we got a topic yet, or we're kind of excited?
I'm going to continue in this vein. I'm going to there's some exotic things out there that we're going to talk about. What we call leverage deductions. And under that is things like bulk mineral and solar credits and gas and oil. Those get a little bit exotic, we'll put it that way. But they can be pretty powerful as well. And we get a good number of people that have done that every year for the past several years. And so I'll go into a little bit more detail on that. I don't know if that's going to be the next one. I haven't decided yet.
Whatever it is, I'm sure it'll be exciting.
But at some point, we will talk about those items. Each one in itself could be its own webinar, but then it gets a little too bogged down, too much detail. And then, so I'll probably do 2 or 3 of those together at one time. So
Awesome. Well,
Sounds
thank you
good.
everyone for joining us. Hope you all have a wonderful afternoon.
Well, I
And
will.
see you soon.
You too. We'll talk to you next time. Thank you. Bye-bye.